Good morning, everyone, and welcome to the room. As you know, trading futures does involve risk. It's not suitable for all investors. The information in the presentation is for educational purposes. It's not a trade signal service, not intended to be financial advice. Hope you're all doing well today. Pretty quiet day on the economic news front, but anything can happen. As we open up, a little bit of a gap down, looks like. We'll be kind of right up here at this 50% retracement short again on the ES. If we take a peek at the other markets, we've got the S&P sitting right at that 50%. Go over to the Dow and draw its 50% up. Same thing, not quite, didn't quite make it up there on the Dow, and then the NASDAQ, like so. Also trading right at 50%, and then lastly the Russell, which is quite a bit different looking. It actually made a move lower, tagged its 50, moved lower, and then bounced, and didn't make it up into its next, well, I should say it broke its next retracement, but it also didn't make it down to the negative 23. So it's kind of in that limbo where it didn't touch the negative 23, but retested more than the next 61.8. So it's definitely the weakest of the bunch. And yesterday's low is a 1550, so that'll be an important level here. If we break that, we should pretty easily be able to come down and fill this gap at 91.75. Not a whole lot to glean from the overnight. Pretty much trading within yesterday's range. Market breadth and an advanced decline line are slightly negative, not extreme, but those could really take off here if we get rolling to the downside. It's tough when you open up at a really close to a breaking point, like really close to yesterday's low, to just, the tendency might be to just short it right in the first 20-30 seconds. But typically there's enough undulation there where it can be difficult to get in and stay in. But we've got 11 and 20 points to this close from Thursday. Yeah, for those that have been in the room for a while, you probably noticed this bluish line on my chart. That's a 100-period moving average. I'm just trying it out. I was working with another trader, and we were talking a little bit about moving averages. It's been a long, long time since I've had anything on my chart, but I thought I'd throw it up there for a couple of weeks and see if anything stands out, see if it becomes helpful in any way, and if not, then I'll just get rid of it. But it's when the moving average is in a steady 45-degree angle, it becomes really easy to take setups with that trend. And when you're flat or starting to become flatter or looking like you're rolling over and you break below the moving average, it can be a little bit of confirmation when you're taking counter trend trades. There's going to be times like down here where if you want to take this trend change, the trend is down, we come up, we break a swing high, and if you were to draw up a long setup, that's a long underneath the downtrend, and at this time in the day, it's going to be a lagging indicator, so it's not going to be as flat as it appears right at this point in the day. But if you're pretty far away from the moving average, it can be a little bit of a gauge to see what it might take to come back to the mean. But a lot of that stuff you can gain from just looking at the price patterns in the chart. Now, obviously at the open, there's going to be kind of a little bit of a disconnect just because, today we don't have much of a gap, but the trend or the moving average can take a little bit of time to catch up. So given that first 15 minutes is beneficial. So we actually have two unfilled gaps, Thursday and Wednesday. We gapped up both days. Now, if we aren't able to, sometimes we'll enter a gap, maybe go halfway or just enter into it, and then won't fill. Well, the signal that we're likely to not fill the gap is to come up and break high of the day. and that will be a helpful way to get an idea of, okay, are we likely to, like, are we just gonna bounce up to the halfway back of the day short, and then roll over again? Because the market tends to not break, like, after the first 30 minutes. Um, if we break to the downside, we tend to sort of stay to the downside, especially after the first hour. If we break to the upside, we tend to stay, above or on top of the kind of the upper half of the day, almost like a sideways S. It's not always the case, but when we do form a range in the first hour and then move above the first hour's range and then move below the first hour's range, it's typically a pretty challenging day of trading. So there's other signs that show themselves before that. Pretty big first 5-minute candle, about 10 points. So if we look at the overnight, you can see this deeper low. So my daily 50% is just to the trading hours low versus the 27.75 low if I bring it down like this. So if your chart does look a little different, that's one case where the daily trading hours is much different than the overnight low. And that does make a good case for us to be able to go there, go down into this new low territory, because we've gone there in the overnight. We haven't yet reached it in the trading hours only session. The overnight's never as strong because there's not as much trading volume in there, but it is important to watch, or at least note, okay, did we make a new high in the overnight? Let's see if we can get there in the trading hours. Did we make a new low in the overnight? And let's see if we can go there during trading hours. Our high tick for the morning is a 94. Obviously, it's not a very high tick. Our low tick is a minus 643. So that gives us kind of some reference points as we get into, kind of get through the first 15 minutes as a kind of a relative high and a relative low. If we came up and made a high ticket like 200, well, that would be relatively high to what we've seen thus far at the open. Another thing, like if I didn't have this moving average on here, one of the things that helps me establish, like, I look at the slope of the candles or the bars, or whatever type of chart pattern you have up. If we start with a big steep series of red Hakanashi candles, and then we kind of move red, green, and go sideways. And I can just kind of, if you can visually look at the chart and say, okay, yeah, we're clearly in a downtrend here. And then, oh, look at this. We've got a little double bottom. We're sort of moving sideways. If I draw up the next 50% retracement, that gives us a 61.8 failure. And then as I come over to the moving average, we can kind of see, okay, it's going down at that 45, but you could see how it could also flatten out, or it could just keep going in that same 45 degree. So could be helpful, could be hurtful, but I'm gonna put it on there just for a little bit. Now I'm gonna draw up the next, or basically the halfway back of the day. We've got a 40, 42, 40. If we could come up and break, we broke the 61.8 by a touch. It was only by a fraction, though. It'd be nice. Whenever we break a 61.8, it's nice to see it break by 2 ticks. I mean, if you've been trading for more than a day, you know that no 2 trades are perfect. This is a nice little double bottom here. We came up, touched the next halfway back short, and then came up and just barely broke the 61.8. I'd like a little more push by the bulls. The distance between the 50 and the 61.8 here is not very large. It's a 1038 to 1105. And so, there's a little bit of wiggle room or sort of undulation. Like if you had a 2910 short on with a 2011-50 stop, 3 or 4 ticks of heat is no big deal. I mean, there's been plenty of times I've had a trade come back 1 tick away from my stop and then roll over. So that's a good gauge if you're ever wondering, like, okay, if I draw a 50% like this, really big, crossing, 15 points, the distance between that 50 and the 61.8, here we've got a 29.16 to a 29.18. That's 2 points. So if I were to put my order out there at 29.16, that would make my 1.5 stop within the 61.8. And I ideally want my stop to be just outside of the 61.8. So in order to do that, I'd have to either put on a larger stop or wait for a smaller setup to trade off of the bigger level. And then I can come in, if in this case it's a short, the bigger setup in this example is a short. So I would have to wait for the market to come up to 29.16s, stop, show some resistance, and then come in here and draw a smaller short off of the bigger level. And that's how I kind of bypass just taking a blind limit at some bigger level. If we can break this swing low here, I'll get in the short without stopping at lows. If we can break 850s but not stop at 750, I would take the next short. I'm okay if we break lows. That would actually be nice if we stopped at 06s and bounce. But so it's a 875. We only broke lows by a tick, but I think it's worth it, given that we have the unfilled gap below us quite a ways. I'm going to get rid of this 50. 875. 29.0875 is the short. We'll see if we get there. $29.0850 I've got it at now. We've got these couple of long tails here, and then the bears being able to come down and overtake the bulls. That's a good sign for the bears. 29.08 and a quarter, and as it stands right now, that's a very nice, the next 50% retracement. As long as we don't fall off a cliff here, 29.08 and a quarter is where I'll have my entry. You've got this little cluster of consolidation back here that kind of lines up with the 50. Now that can act as resistance. $29.08. Rounding down and subtracting a tick, so that stop is at 950. Let's see if she gives us anything. No low tick or anything down here to speak of. We did have the bulls drive it up twice on these two 5-minute candles. And then the bears overtook that to a new low. Kind of getting that same pattern. Over here we had a short. We came up to it, kind of double topped twice, and then sold off. So the same little pattern. Wasn't able to do it on the first drop, but now getting a sell off on kind of the second, I guess you call it the retest or the second test. Made it to 06s. Got to go another tick to get that first target hit. There it goes. Okay, so my stop, I'm going to bring it down to an 850. Here's our negative 23% target. If I draw up the next retracement, I could even bring the stop down tighter. 2907 would be, I'm going to split it. I'm going to put one 2907 and a quarter, and then I'm going to leave one contract left up here at 850, and then the rest I've got it 7 and a quarter, just in case we come up. It's close enough where, like yesterday, in yesterday's video, I highlighted a long trade that I got taken out of most of the position, but I left one contract, and we went through the 61.8 by a little bit more than where I had my stop, like 4 ticks or 3 ticks, and then I got taken out of most of it, and there goes kind of the same scenario. Let's see if we come up and take that last one out at 850. No, didn't really make any lower ticks here. That's interesting. The ticks are rising, actually, higher lows. But at least you got a first target and another point on the middle chunk. There it goes. Okay, so not having a little bit of a struggle getting down. What did we say our gap fill was? 92. And we made it down to a 2904. Interesting, so the 2900 might be a level of support. So Ryan's comment on making his stop tight, but starting the day in the green, or positive in the black. Yeah, don't feel bad about getting out of a trade because you had your stop too tight. I mean, the thing is, you want to follow the same process for every trade. What you don't want to do is say, well, shoot, I got out of this trade. Like, let's say, okay, I trailed my stop on this trade. This one only went down to 2905s, and then it reversed. So then the next trade you take, what you don't want to do is say, okay, I'm just going to put my target for the whole position at 3 points. And then, that trade will likely end up being a runner. And then you say, well, shoot, now the next trade I'm going to trail my stop. And you're kind of on the backside doing what the last trade, like kind of basing your actions based off of whatever the last trade did. That's not a healthy strategy, to be tweaking your strategy based on one trade. You want to make assessments based on like 20 trades. Look at a group of 20 trades and see if there's anything that stands out. If you're just making adjustments based off of the very last trade, you're always going to be on the back side of like what to do. So you want to be a step ahead, not a step or two behind. So now that we've come up and broken this little double top here and the 61.8, we can draw up our first long and see if we get make it up to the halfway back of the day at 29.12. Now sometimes you need the halfway back of the day, which would be the very first one to trade, in order to kind of build some longer term buy-in, or in this case, selling. Sometimes you get folks who wait for that first halfway back, and if it hasn't traded yet, we didn't make it up at this swing low, and you take, okay, the next swing low didn't make it, next swing low, we're on our way, but not quite there. One habit hang on one second. High tick, 56. So there's a 29.0750 long that puts us close to the 50%. But we're close enough. Yeah, that's okay. That's what I thought would happen. We just hit the 50 first, so don't even have to draw that up. I'll draw it up as the opposing. Came close, 2 ticks away. This is where if you get this upside down V, taking this short sometimes can bite you when you just go straight up, straight down. If you draw up the short, sometimes you come up and make a double top. So I'm not going to take this short, this tiny one, even though we broke the swing low. The pattern so far today has been to retest the 50% twice, like right here, and even 3 times. And if it goes great, then maybe I'll just try to take this second short. If we had gone a little farther, we kind of made this quick push, but then fell off. It's hard to say if that's, big selling or just lack of buying. But a nice inverted hammer forming, and we got another minute before that closes. That's a good sign for the bears, or at least to the downside. Looks like that short is getting some momentum. We'll see how we react here at 29.08. It's always important to draw the opposite setup, like the daily short, halfway back short from highs to lows. That daily halfway back is a short. I want to know, okay, what happens at the opposing long? Just like on the daily chart, the actual daily candles, okay, here's the big daily short. I want to know what happens when we come down to the opposing long. Well, the first time we stopped at it, bounced. Second time we gapped down to it and then sold through it. And then here we are kind of on our way down to it again. So you know you have a you're on your way to a solid strategy when you can move it across different markets and different time frames. Okay, so breaking through the 61.8, I'm going to go with, it's a 08. It's a little bit, it's really a 775. Kind of in between. We've got an 08 and an 09. So if you use 8s, it kind of splits the difference. Might be a little messy. But these tails are a little concerning. We've got bottoming, like opposing tails here, a couple of bottoming tails back here. Yeah, the moving average is kind of flattened out here. Could come all the way up and make a retest of that halfway back. But the advanced decline line is a little bit weaker than it was earlier. It was in the 600s. When you get two 50s that are close like this, you can just split the difference. Just use like an 850. You got an 08 and an 09. Just split it down the middle, 850. At least that's what I found works pretty well. And then just, I still use 2-point target. The negative 23s are close enough as it is. A 950. Yeah, so Steven, I've got an 850. 850 short. Kind of came up quick, and you draw up the two, and I quickly look at, okay, the 250s, 8, 9, boom, 850. I just put in the middle. And then that puts the first target at a 650. Yeah, and just the more you get familiar with your trade ladder and your charts, and you're just almost like training your eyes to see, like as I was looking at this setup, I could tell that this high is going to be pretty close. So as I'm going to my chart, I'm thinking, okay, here's the 50, 8.25, and as soon as I'm like, drawing it up, I'm like thinking on my dome and kind of looking at a little above 813, and then I just glance at the other higher 50, and then can just quickly, okay, 850. And there's times where you'll get like a low ticket lows and then a little bounce, and within 30 seconds, sometimes even less, you get a little bit of a pullback. And what I'll do in those cases, kind of look at the low and just eyeball where, like if I were to draw my anchor point, I'll do this even before we've bounced, just to get an idea where the 50 would be, so I can, because I can't have I do have two mouses, but I can't have my right hand on both mouses at the same time. So sometimes it's quick, sometimes I miss, I certainly don't catch them all, but I'm going to do the same thing and split my stop and do an 08s and then a 950. See if the same thing. I guess it was an 8 1/4. So 8 1/4 goes. We've been a little bit dirty on some of these smaller ones, like not coming down to the -23 the first time, coming up, getting a little messy in there, and then rolling over. So that's why I'm leaving one contract back up above. It's still tighter than my initial stop, and getting a first target hit is always helpful to lock in 2 points, but it's not really, the trade really hasn't gotten going until you're through that first target and beyond. So if this one ends up kicking me out of the last contract, which it looks like it will, I just consider those kind of two small winners versus like, oh, there it goes, versus they're decent trades. Sometimes on range bound days or days like this, you just pick up, a couple points here, a couple points there, and all of a sudden, boom, you're up 6, 8 points on the day, or like 2 points per contract, which can certainly add up. But the idea is to catch this bigger drop to fill the gap, but we shall see. But back to Ryan's point earlier about kind of getting some momentum early in the day, that's a real thing. Whether you have to trade, open up a sim account and just kind of click around in the pre-market to get out some of those quick trigger jitters and kind of get into a little bit of a rhythm, that can be a helpful way to combat that urge of, okay, the markets are open, I got to take a trade right now, and then ends up being a loser. That's no good. Look at these opposing tails here, where we have a long tail. This is the 5-minute chart. Long tail one direction, long tail the other direction, even back here the other direction. So lots of indecision. Just coming back up to this halfway back of the day, not surprising. But one of these times, that was the second short I took. In one of these times, if we do drop, it's not going to come back up and retest. It's going to fall off, make a new low, and that's where you don't just get that 2-point target hit. It goes for 6 points or 10 points. And then that middle chunk of contracts ends up being, a pretty decent winner. But yeah, don't feel bad if you ever miss a setup or you draw something up after the fact, or even if you miss a high tick at highs. There's a lot going on. That's one reason I try to keep my charts as simple as I can, because there's so much to process. And just, a basic 5-minute chart with nothing else can give you so much information about what's going on when you look at what is the shape of the candles, which direction are the tails pointing, do we have a hammer at lows, and then what's preceded or what's following that hammer. That kind of stuff can really go a long way. The Steve Neeson's book, Charting Candlestick Techniques, is pretty good, but there's a lot of stuff out there just on basic candle patterns and open, high, low, close. That's where it's at. If we look on the 512, we can really see, and how messy it is here, and we can already tell that we're within the first 30-minute range. If I draw horizontal lines at the top and the bottom of the high and low for the day, that happens to be the first 30-minute high and low, and if we can't get out of this range, then that's a very strong sign that, I mean, by definition, if we're stuck in a range, we're range bound. But sometimes those basic concepts, higher highs, higher lows, sometimes those basic concepts can get lost, and we try to overcomplicate things and make it harder on ourselves. Uptrend in the nicey ticks here. So if we get one that breaks this uptrend, that might be the start of a decent move lower. Here's a second test. We'll call it a retest. It's still fairly far away from the 50, with no real swings on the way up here either. You see, this is where the moving average started at that 45. Now it's kind of sideways. It could easily turn up. It could go flat. It could go down. So you can't really worry about sort of the end of the 50%, or I mean of the moving average. But just the fact that it's no longer going steadily down at a 45-degree, tells you that the trend is not as strong as it was right at the open. And obviously, visually we can see that too. So it may be redundant and I may take it off, but I thought I'd give it a try. Here, if I draw lows to highs, we've broken the 61.8. And then if I use this anchor point to highs, we haven't come down and touched the 50%. So a little bit sloppy this morning. And the fact that we're trading within the first 30-minute range makes me very cautious at this halfway point. I'd rather take trades down at lows, take trades up at highs, and I'd be okay, if we were to come up and punch through highs and then pull back to this high of the day, 29.20, I'd be okay taking a long up here, especially if we pull back to support. But I don't want to be too heavily active right in the middle of the range, because that's where we tend to just go straight through and straight through the other direction and not really stopping much. So we'll see what the market gives us here. $16-point first 30-minute candle. That's a decent size. Maybe not relative to the last week or two, but we've had days that have been 16 points. So that's also a sign that we could be headed for a range-bound day. When the first hour or first 30-minute range is pretty big, well, then it takes more movement, obviously, for us to move above or below that range. High from yesterday down to low from today really just puts us at the top of the puts us at the high of today. Yeah, it's easy to sit there in front of the chart, especially later in the day, and kind of get bored, twiddle your thumbs, and then just take a trade to take a trade and get burned, or know that it's not a very good area to be placing trades, but you sit there and you kind of talk yourself into it, or you force it, and if you get lucky and it turns into a winner, that's probably a bad thing. Yesterday's support and resistance levels, we've got kind of this dip down here at a 15, this just above where we're at now, and then the big cluster kind of point of control from yesterday is up here around 25. What was the exact number? Yeah, 25, 25. The value area from yesterday, I'll pull this over so you can see. Value area low is just above us, well, or just above highs of the day, 21s, and then we're trading down here, just at the low of yesterday. If we can drop below the 61.8, I might take another short. The idea there being, okay, we've established resistance at the halfway back. So, what I'm not doing is putting a blind limit at the 50%, at the bigger halfway back of the day, but letting it sort of establish its downward momentum. I would draw up the full opposing setup. And if we were to move lower without stopping right at the 50, then break some of this uptrend, then might be good for a short, but it's looking like we won't be double topping here. You probably have seen me draw up retracements that go from below a 50 to above a 61.8 as a way to get in to a move that's failing a bigger halfway back in the other direction. But today we've been pretty we get one, maybe two moves in the direction and then change trend. We had this big inverted kind of dragonfly doji here, broke below it, and then just put in opposing tails and failed, moved above the top of its tail. So lots of indecision. That breadth and the advanced decline line coming down, the breadth definitely coming in, minus 1.7 to 1. We were at like minus 2.6 earlier. So becoming more balanced or more even. And then here we are sitting right in the middle of the range, not too far off from the open and not too far off from yesterday's close. But, even if you take, like if you get in a trade, let's say you had 3 contracts, and I like 3 contracts because you can have a first target of 2 points. You can have 2 contracts left that you can then trail your stop on. You could, on the second contract, have a fixed target of, say, 4 points if you'd like. If you like the idea of having a target out there so you're not giving back very much. But either way, you could still have your stop on those last 2 contracts at 2 different places. So for like earlier, let's say you have your stop, and you get in at, we just call it an 09, and then you have your stop on one of the contracts at 08s, and then one of the contracts at 0950. So you're going to lose half a point on that contract. You'll make the 2 points when you hit the first target. So now you're up 1.5 points, and then you're up another point from your little more aggressive stop behind the 61.8. So you're up 2.5 points. It's not quite 1-to-1, but it is certainly better than a full stop out by just having your stop at -6 and letting it come all the way back if it didn't hit the -23. So you take, if you're risking 4.5 points and you end up coming away with a small winner at 2.5 points, you take 2 of those, now you're at 5 points, and just by straight dollar amount, that's 2 pretty small winners, but 5 points, no matter how you slice it, is $250 on the ES, and it kind of slowly adds up. If you got 6 contracts, obviously then that's double. The ratios are pretty close to the same. Yeah, that's an option too. So Ryan says, if we've got the short drawn up like this, or any trade drawn up, your first contract at the negative, or at a 2-point target, and if the -23 is beyond a little bit further, rather than just like I said, you could use 4 points. Sometimes that lines up right with the negative 23, but it just depends how big the setup is. So first contract at 2 points, second at the negative 23. It might be a 3 points, it might be a 5 points, but it's typically you're going to see a reversal there and then trail your last contract. The idea is you got your bases covered so that if it does reverse after a couple of points, you're not turning a trade that has a little bit of momentum into a big loser or into a loser, like a full stop out. But you're also giving it a little bit of wiggle room so that you don't get stopped out for one tick just because it moved kind of up to break even. On the 5-minute chart, I like to see when it breaks the low price of the highest bar. In this case, it's kind of this current bar moved higher. So if it moved any lower, okay, so on this next candle now, we would have to break an 1150. And that would be the first time we broke a candle's low since back here, the top of the hour. This is a very tiny swing low. I would consider this little double bottom a better swing low to break, to be looking for a short. But again, we're just kind of in that indecision area in the middle of the range where we could go either direction. So it's definitely a higher risk play trying to pick a direction right here, especially same pattern we've seen all day. Come up, just kind of breach the 60-1/8 by a fraction, and then come back down. I guess it's worth to note the moving average is in that 45-degree uptrend, but again, it can flatten out kind of later and lag. So I don't really pay attention to the front end of it. Even that draw of the long, just barely breaching the 60-1/8. So I'm going to let this short go. If it was earlier in the day and we didn't have so many tails down here, I might consider it. But if the first one goes, then we should have an opportunity to maybe take some other short down here before we come down and break lows. I mean, we have a ways. 2,900 is the negative 23. So we'll see. I will say it's been a little bit better August than years past. I don't know if we've had this kind of a pullback like to this extent in an August in quite a while. High tick of the day, but not the high of the day. See, that's where just using the patterns that we see throughout the morning as a way to say, well, we've come down and we've broken a 61.8, but just barely. So what have we been seeing throughout the day? Well, it's been this kind of retest or make a double top and then get a bigger move lower. So a lot of those cues, can be helpful for the day. And even for the week, sometimes those kind of patterns can repeat themselves throughout the week. Yeah, the more you become familiar with your chart setup and the tools that you have on there, um, you'll be able to spot things and get a sense of what's happening the more you keep things consistent and simple, the easier it is to spot some of those nuances, and then you feel like, oh, well, I got a good rhythm going, I got a good read on the market. You can call it a lot of different things, good intuition, but that's where it stems from. You put a hypothesis out there and you kind of check it against what you're seeing, and if you end up being correct, then you can kind of tie some of those correct hypotheses and ideas together. So we have broke the low of the high bar up here. We kind of, even though the candle is green, it was a bearish engulfing. The body doesn't engulf it, but the high and low does. And now we're drifting down. We'll draw the opposing short. It's fitting that we came and breached the 61.8 of the daily short. A little bit of a widening formation where we've got higher highs and lower lows. That's a pretty dangerous pattern. You can get whipsawed around taking trades in that area. Like if you came here and you draw a short and you get stopped out, and then you say, oh, let me draw long, and then you get stopped out. That's why that middle of the range can be pretty dangerous. And I always watch out for lower lows and higher highs that are being made at the same time, to where instead of getting tighter, you get the ends of the triangle that are actually widening. So our second 30-minute candle just completely inside the first one. So that's the other thing that ends up happening when you have a wide 30-minute first candle. You end up with inside bars following. And sometimes it takes 2, 3, even 4 inside bars to kind of get the market to break out, or at least to digest and pick a direction. Getting a little bounce off the halfway back long from lows to highs. So just like the daily, we may pinball a little bit before resolving one direction or another. And back up at the short. Back up at the halfway back short off of this long without much to do. Another high tick. We did kind of get a breach of the uptrend and the tick channel here, but not really enough to 735. And down here, I guess it was right at the long, but still not a lot to do. And that's okay. You know, we've had some good trending days here. Oops. And there will be more. So we've got the rest of this week, next week, which will be into Labor Day weekend. Friday would likely be slower. And then Labor Day week is a shortened week. And then 2 weeks after that till the Fed meeting. And then we should really see things get going then. Not that they haven't already been moving, but yeah, September 18th, FOMC meeting announcement. So that is the third week in September. So the reason, Stan, that I don't have a long setup drawn here, like off of this 50, I would do something like that, um, is because we're still, like here on the 5 minute, we're just kind of moving sideways within the, right in that middle of the range. I haven't really seen anything that shows a strong bias to the upside. The breadth and the advanced decline line are still pretty flat. If this first 50, if this halfway back long from 2909s would have come up and made it cleanly to the negative 23, then I could maybe see a case for taking the next long, but look where it leaves you, right in the middle of the first 30-minute range. So then I would say, well, it'd really have to line up with some support and see a strong shift in the breadth and the advanced decline line. But as it stands right now, everything's kind of the same. So I'm trying to stay out of this middle zone. I also look at the pattern of the trades that I've had today, and both of them got a little bit of momentum and then petered out. Sometimes, or most of the time, on the days where I've got 5-6 trades in the ES, it's because it's range bound and I get a little momentum and then it kind of reverses, and then I take a stab at something else, get some momentum, and it reverses. That's why I have a lot of trades. Whereas on a good trend day, sometimes I get in at the open and I'm trailing my stop, even if I'm just down to that last contract and trailing it for a couple hours at times. There's sometimes where it's so tight that you can stay in all day. And so then on those good trend days, I don't end up having many trades because I'm just trailing my stop. It's not to say that a trade in the middle of the range would never work. It's just the risk kind of degrade the gains or the potential gains. I'll draw this up here just to use it as a reference point, and I'm sure as I say that, this long here will go straight to its target and then rocket 10 points. But if you look at it on the whole and don't just look at one individual trade, like I said, try to look at the trades in groups. That will be a better way to make decisions that are going to be affecting your trading plan and your strategy. At least now, though, we have a definitive break of the halfway back short. So that's what the 30 looks like. Yeah, I see. So this is one of those areas with this, whole looking at the moving average is, okay, if we're in the middle of the range, but we're sitting on top of the moving average here, is it worth taking a stab at the trade that's in the direction of that moving average, which in this case is up? Is it worth taking a stab at the long in the hopes or anticipation that we'll sort of be moving from a range-bound market to a trending market? And can we spot a change in trend maybe a touch earlier than you would otherwise? So I don't have any definitive answer on that yet, but that's one of the areas that I'm interested in looking at. And I'll take this specific trade at the halfway back short today into account as I kind of go through, and I need at least a couple of weeks of a couple of trades each day to build a kind of a book of examples where I can have enough data to compare. So we'll see what I can pull out of that. No matter how long you've been at it, you're never going to catch every move. And you're better off kind of staying the course versus making constant strategy changes. As we come up here to the top of a first 30-minute range, be interested to see how we react. I mean, that's the highs of the day as well, especially up near if we get a high ticket highs. And of course, just as we were talking about this this long in the middle of the range, it does get a pretty hefty 6-point rally. So you very well could be onto something there, Stan, and use that intuition. You may have seen dozens and dozens of this kind of a setup taking place, and without necessarily knowing it or consciously looking for it. And so that's where that kind of intuition, if you're seeing a certain pattern set up, then it's helpful to listen to that and don't get so caught up in the talking heads on TV, or that's one of the reasons that I don't do the trading room here every single day. I mean, it's the idea is that you become your own trader, decision maker, and can go off on your own and continue to grow, versus just becoming dependent on having to follow along and not be able to make any decisions on your own. So we've got both the extension high up here and the traditional low to high. Either one, I would divert to the low to high traditional short or traditional long. Here's this tiny little short in 1850, 18 and a quarter, got a 1 tick swing low. Came up right to highs of the morning. Yeah, just 1 tick away. Yeah, breaking a halfway back short like this and then taking the 50 that crosses it is a setup I will use somewhat often. So you're right there, Stan. The context comes quite a bit into play. See if we maybe put a little double top in up here. I just drew this up as reference. This little red candle didn't even break any of these candle lows back here. And then this larger halfway back, or long, more importantly, has gone through its negative 23 and now up to its 61.8. So I would watch for if we did push into new highs. Yesterday's close is pretty close, so 23.50. So a possible reversal at 23.50 just on the gap fill is something you see a fair bit, watching the high ticks at highs. And then if we just kind of like yesterday, come up here and then fall back into the first 30-minute range, especially if we have a high ticket highs and we touch yesterday's close, then a short to take us down to the bottom of the first 30-minute range is what I would be looking for. But I think we'll leave it there for today. Good questions and good, really good observations. Stan, Ryan, David, appreciate it. Yeah, really good discussion, and I'll keep watching the moving average, see if I can pull out anything useful. But we'll see if it can give any clues to that middle of the range changing trend, as Stan was talking about earlier. That was a nice little move that just kind of came out of the chop from here. And sometimes you need to be able to see that move, and then it kind of gives the okay to take more setups. Obviously, it's always nice to be able to be in before the move happens, but there's plenty of times where you get in and you get a pretty good run, and you can take 10 or 12 points without a whole lot of effort. So they all kind of, you take the good with the bad and try not to kick yourself for missing a trade, or especially if you come back, like, I don't really sit here all day. So if I come back in the evening and look at the afternoon and see a big run, of course you're going to be able to come in and pick out an entry. But what you don't see are the losing trades that you may have likely taken if you sat there all day and just twiddled your thumbs, and then, as Ryan said, take a boredom trade and then kick yourself for making a silly trade that you wish you wouldn't have. So I know I can be pretty critical and hard on myself at times, so I try to cut myself a little bit of slack when it comes to just trading what I see with the information I have, with the patterns that are in front of me, and there will always be another day. But if you make some silly mistakes and blow up your account, then you won't have the capital to trade another day. So pay attention up here. This 2920 should be an interesting area, and we'll see where we go from here. So thanks for tuning in this morning. If you do have questions or want me to take a peek at any charts or trades, feel free to shoot me an email. I'm always happy to take a look at anything you've got. So thanks everyone, and we'll talk to you very soon.